What is happening, everyone, and welcome back to Bitcoin Bulletin, your ultimate source for the pulse of the digital asset world. The news cycle is moving at lightning speed, and if you're not plugged in, you're missing out on the seismic shifts happening right under our feet. Today, we've got a packed show that you absolutely cannot afford to miss. We're diving deep into a groundbreaking legal decision out of India that's sending shockwaves through the crypto community, revealing the darker side of digital wealth and the lengths some will go to. Then, we're shifting gears to the startup scene, uncovering innovative strategies that are helping burgeoning companies navigate the treacherous waters of market volatility, all while making bold moves in the Bitcoin accumulation game. We'll also explore how major corporations are strategically stacking Bitcoin, with a fascinating look at one Japanese firm's aggressive approach and its broader economic implications. And finally, we're venturing into the future of digital security with El Salvador's forward-thinking quantum-resistant Bitcoin strategy, a move that could redefine institutional crypto safety. You don't want to miss a second of this. Stick around, because the future of finance is unfolding now. Make sure to hit that like button, subscribe, and ring the notification bell so you never miss an update. India delivers landmark verdict in Bitcoin ransomware case. In a move that signals a significant step in the global fight against cybercrime, India's judiciary has handed down a life sentence to 14 individuals involved in a sophisticated Bitcoin-based ransomware scam. This landmark verdict, delivered on June 25, 2024, by a special court in New Delhi, targets a criminal network that defrauded over 200 victims across the nation. The group utilized malicious software to encrypt victims' data, demanding Bitcoin payments for the decryption keys, a tactic that has become increasingly prevalent in the digital age. The operation, which came to light in early 2023, involved complex layers of obfuscation, including encrypted communications and the use of dark web marketplaces, making the perpetrator's activities difficult to trace. Law enforcement agencies, however, managed to recover a substantial amount of digital assets, seizing over 300 Bitcoin, valued at approximately $2.2 billion, roughly $27 million USD, from various wallets and cryptocurrency exchanges linked to the suspects. This recovery is a testament to the growing capabilities of financial intelligence units and cybercrime divisions in tracking illicit digital flows. The case has cast a spotlight on India's ongoing struggle with the burgeoning rates of crypto-related fraud. Official reports indicate a staggering 72% surge in such crimes in 2023 compared to the previous year, highlighting the urgent need for robust regulatory frameworks and enhanced enforcement mechanisms. The sentencing is seen by many as a strong deterrent, emphasizing the government's commitment to combating financial crime in the digital asset space. Cybersecurity experts have lauded the verdict, while also calling for greater international cooperation to tackle cross-border cyber threats effectively. The complexity of tracking transactions across different jurisdictions and the evolving nature of digital currencies present persistent challenges. India has been strengthening its anti-money laundering measures, including those under the Prevention of Money Laundering Act, to address these issues, though the effectiveness of cross-border enforcement remains a critical point of discussion. This case underscores the dual nature of digital wealth, its potential for innovation and its susceptibility to exploitation, and reinforces the global imperative for collaborative efforts in securing the digital financial ecosystem. Audience impact. The swift sentencing and significant asset recovery have been met with widespread approval from cybersecurity professionals and law enforcement agencies, who see it as a crucial victory in the ongoing battle against ransomware. However, the surge in crypto-related fraud has also fueled public concern and renewed calls for stricter consumer protection measures and clearer regulatory guidelines for digital assets in India. Authorities have emphasized the need for continued vigilance and technological advancement in combating these evolving threats. Next, we'll explore how startups are innovating amidst market turbulence. Crypto startups navigate volatility with innovative Bitcoin fundraising. In the dynamic and often unpredictable world of cryptocurrency, Startups are increasingly adopting aggressive Bitcoin accumulation strategies as a hedge against market volatility and a store of value. However, this path is fraught with challenges, as exemplified by Tokyo-listed firm Metaplanet. Metaplanet, which has made headlines for its ambitious goal of accumulating 100,000 Bitcoin by 2026, currently holding nearly 19,000 BTC, has seen its share price plummet by 54% since mid-June. This sharp decline has significantly impacted its capital-raising model, which relies on rising share prices to secure funding through warrants issued to its primary investor, Evo Fund. The falling stock value makes exercising these warrants less attractive, thereby constraining Metaplanet's liquidity and slowing its Bitcoin acquisition trajectory. This situation is not isolated to Metaplanet. It reflects a broader trend across Asia, where crypto startups and small and medium-sized enterprises, SMEs, are increasingly turning to Bitcoin due to growing regulatory clarity and persistent macroeconomic uncertainties. The challenges faced by companies like Metaplanet underscore the critical need for innovative fundraising strategies that move beyond traditional financial avenues. To navigate these complexities, crypto startups can leverage blockchain-native fundraising methods. These include token sales, such as initial coin offerings, ICOs, initial DEX offerings, ETOs, and security token offerings, STOs. ICOs involve selling tokens before a product launch. ETOs facilitate token launches on decentralized exchanges, offering liquidity and community engagement, particularly for DeFi and NFT projects, while STOs issue tokens backed by real-world assets, ensuring compliance with securities laws. These methods offer greater transparency, efficiency, and global investor access compared to conventional fundraising. Furthermore, startups can explore decentralized finance, DeFi fundraising platforms, which cut out intermediaries, democratizing investment and building trust. Non-fungible token, NFT, tokenization also presents a novel fundraising avenue, where NFTs linked to digital assets or exclusive project benefits can attract capital and foster community engagement among diverse investor groups, including gamers and art collectors. Digitally issuing tokens representing equity or assets can provide liquidity and fractional ownership, with smart contracts automating distributions and reducing costs. Platforms like InMind are emerging to connect startups with targeted investors efficiently. Managing treasury risks is also paramount, with strategies like dollar cost averaging, DCA, and the use of stablecoins for payroll helping to mitigate the impact of Bitcoin's price fluctuations. The adoption of crypto payroll, paying employees in Bitcoin or stablecoins, is also gaining traction, attracting tech-savvy talent and positioning companies as forward-thinking in a competitive market. Audience impact. Metaplanet's situation has sparked considerable discussion within the crypto community about the risks associated with aggressive Bitcoin treasury strategies and the importance of diversified fundraising. Analysts are closely watching how the company and others like it adapt their financial models to weather market downturns. As startups innovate their funding models, major corporations are also making strategic moves in the Bitcoin space. Next, we'll look at a Japanese firm's aggressive accumulation strategy. Japanese firm Convano pursues aggressive corporate Bitcoin accumulation. In Japan, a notable trend is emerging as corporations increasingly explore Bitcoin as a strategic asset for treasury management and long-term value preservation. Convano, a firm operating within this evolving financial landscape, has garnered attention for its aggressive approach to Bitcoin accumulation. This strategy reflects a broader shift in corporate finance, where digital assets are being considered not just as speculative investments, but as integral components of a company's financial resilience and future growth potential, particularly in an environment marked by global economic uncertainties and a search for alternatives to traditional reserve assets. The rationale behind such aggressive accumulation often stems from a belief in Bitcoin's long-term value proposition, its decentralized nature, and its potential as a hedge against inflation and currency debasement. For companies like Convano, the decision to allocate significant capital to Bitcoin is a calculated move aimed at diversifying their balance sheets and potentially capturing substantial upside in the burgeoning digital asset market. This strategy, however, comes with inherent risks, primarily the price volatility associated with Bitcoin. Managing this volatility requires sophisticated treasury management, including hedging strategies and careful consideration of entry and exit points. The firm's commitment to increasing its Bitcoin holdings signals a strong conviction in the digital asset's future, positioning it as a potential leader among Japanese corporations embracing crypto. The implications of such corporate Bitcoin accumulation extend beyond individual firms. Widespread adoption by major companies could significantly influence market dynamics, potentially increasing demand, enhancing liquidity, and lending greater legitimacy to Bitcoin as an institutional asset class. This trend could also spur regulatory clarity and the development of more robust infrastructure for corporate crypto engagement in Japan and potentially across Asia. As more companies like Convano integrate Bitcoin into their core financial strategies, it signals a maturing market where digital assets are increasingly viewed through a lens of strategic financial planning rather than speculative trading. The success of these strategies will likely depend on a combination of market performance, effective risk management, and the evolving regulatory environment. The firm's bold stance serves as a case study for other corporations contemplating similar moves in the digital asset space. Audience impact. Convano's aggressive Bitcoin strategy has been met with a mix of admiration and caution from market observers. While some applaud the firm's forward-thinking approach, others highlight the significant risks associated with such concentrated exposure to Bitcoin's volatility, particularly for a publicly traded entity. As corporations rethink their treasury strategies, governments are also looking ahead, particularly regarding future technological threats. Next, we'll examine El Salvador's groundbreaking quantum-resistant Bitcoin strategy. El Salvador pioneers quantum-resistant Bitcoin strategy for institutional security. In a move that positions it at the forefront of digital asset security, El Salvador has announced plans to develop a quantum-resistant strategy for its Bitcoin holdings. This initiative is a proactive measure designed to safeguard the nation's significant investment in Bitcoin against the potential future threat posed by quantum computing. As quantum computers advance, they could possess the capability to break current encryption standards, including those that secure many digital assets. El Salvador's foresight in addressing this challenge signals a maturing understanding of the long-term security requirements for institutional crypto adoption. The strategy aims to implement cryptographic methods that are resilient to attacks from both classical and quantum computers. This involves exploring and integrating advanced cryptographic algorithms, such as lattice-based cryptography or hash-based signatures, which are believed to be resistant to quantum decryption. By prioritizing quantum resistance, El Salvador is not only protecting its national Bitcoin reserves, but also setting a precedent for how other nations and large institutions can secure their digital assets in an increasingly uncertain technological future. The nation, which famously adopted Bitcoin as legal tender in 2021, has consistently sought innovative ways to leverage and secure its crypto assets, demonstrating a commitment to staying ahead of potential technological disruptions. This strategic foresight is crucial for the broader adoption of cryptocurrencies by institutional investors, who often cite security concerns as a major barrier. By demonstrating a tangible plan to address the quantum computing threat, El Salvador could pave the way for increased confidence and participation from traditional financial entities. The development and implementation of quantum-resistant cryptography are complex and time-consuming, requiring significant research and development. El Salvador's initiative suggests a willingness to invest in these cutting-edge solutions, potentially collaborating with cybersecurity experts and research institutions to build a robust and future-proof security framework for its Bitcoin operations. This forward-looking approach underscores the nation's commitment to establishing Bitcoin as a stable and secure financial tool. Audience impact. El Salvador's quantum-resistant strategy has generated significant buzz among cybersecurity experts and the broader crypto community, who view it as a vital step towards ensuring the long-term security of digital assets. Analysts are keen to see how the nation implements these advanced cryptographic solutions. From groundbreaking legal verdicts to future-proofing digital assets, the crypto world is constantly evolving. That's all the top stories for today. That was a whirlwind tour of the hottest stories shaping the digital asset landscape. We saw India deliver a landmark verdict in a Bitcoin ransomware case, explored innovative fundraising for crypto startups navigating market volatility, checked out a Japanese firm's aggressive corporate Bitcoin accumulation, and dove into El Salvador's quantum-resistant Bitcoin strategy. What a show! If you found this information valuable, do us a favor. Smash that like button, subscribe to Bitcoin Bulletin for more essential updates, and ring the notification bell so you're always in the loop. Don't forget to follow us on all our social channels for even more insights. Until next time, stay informed and stay ahead.